Hello, everybody, and welcome back to another show. Thanks for joining us again today. As usual, we have co-host extraordinaire with us, Sandy McKay. How's it going, Sandy?
Awesome, Rob. Awesome. Excited for another one here. Yourself?
Doing well. Getting a little tan on, so we're still over here. We're still overseas, or I guess I don't know if you call it overseas. We're in Costa Rica still, anyways, and we had to fly across the sea to get here, I believe. But yeah, so we're just trying to figure out exactly the logistics of getting back right now, which seems to be a little bit of a challenge. So I'll keep you posted on that.
It's all good. This is part of the dream, I guess, and the plan for a lot of people. I've seen a lot of real estate investors down there this winter season, and able to do, have kids go to school. You're able to function, I guess, relatively well still there this year in a more virtual world. So it's cool. That's part of the reason for building wealth.
Exactly. No, we've had the opportunity to meet up with some of the people that are down here too. So it's been good. It's been good that way. And awesome. Share some ideas with people in a different atmosphere. So, everybody listening, of course, should, as usual, go over to our website, breakthroughreipodcast.ca. There they can listen to all of our old shows, get in touch with our guests through the links, and see all the other social media outlets that we have. They can access through that point. And they can also get our free gift.
Yeah, the ultimate strategy for building wealth through real estate. And you can pick that up, get on our email list, never miss out on our show, and join in on everything we're doing online. They should also go like our Facebook page, facebook.com/breakthroughREI. That way you can join us, as some of you are right now, live, ask us some questions, join in the conversation. YouTube, we're all over the place now live. So if you're just listening to this and you want to come tune in maybe with some live shows, we are pretty much almost every Wednesday, every other Wednesday, 10:30 a.m. Eastern time. And we're on here. Most of our shows are that time. So come join us and jump into the conversation as we're live.
Yeah, I think that's really important. I mean, anyone listening today, feel free to jump on there and ask Cody, our guest, some questions, because I'm sure that everyone will be interested in what he has to say. So I would encourage everybody, get on there, interact with us. And, go over to iTunes as well and just leave us a rating and review. It helps us out a lot. So get over there if you haven't had a chance, and just leave us some words of encouragement or some of your thoughts of what you think about the show, some things you'd like to hear, maybe that we haven't covered. But at any rate, just tell us what you're thinking. And we would greatly appreciate that. We've got a bunch of 5-star reviews, and we're really happy to have everybody who has, taken that time to do that. I don't have the reviews up again today, so I'm not going to read any. But next time we'll get to a few more of the reviews. Because we like reading those and hearing what you guys have to say and letting other people know what you guys have had to say. So we'll get to that next time. But Sandy, you got anything else you want to cover before we get into it?
Not really. I think this is an exciting one. It'll be fun to share, hear from our great guests coming on here. We're going to talk about some different investment strategies, and I'm interested to learn as much as probably everyone else is. So I think we just get into it.
Yeah, I'm excited too. Cody, welcome to the show.
Hey, thanks for having me. I'm really excited to get on. I used to be driving around when I'm commuting from Toronto to Alliston when I work at Honda, and Breakthrough Real Estate Podcast was definitely always on my list in the library. And I just always put it on 1.5 times, and I listen to most of it.
Rob talks
I've never done that. I wonder what we sound like. It's a little chipmunk action going on.
It depends. It depends on the speaker's speed, but sometimes 1.5, sometimes 2 times. Yeah.
Yeah. On Audible, I'm usually like a 1.2. I like it just a little, I got to speed it up just a little bit. And then when you turn it back to normal speed, it sounds weird. So we probably sound a little off to you right now then.
Yes. No, it's actually pretty good. I really focus on the content, right?
Yeah.
And the content is really good. Like the voice is secondary to me.
I'm a 1.3 now because they changed it. I think it used to be 1.25 to 1.5. Now they got it more increments. So I've noticed I'm a 1.3 on Audible, if in case anyone was wondering.
On Spotify, you can go to 3 times.
Really?
3.5 times. Yeah.
Wow. Well,
you got to
awesome
really train your brain to take in the content at that speed, I'm sure. But once you do, look at what you can do. Look at how efficient you can be.
Yes, that's the key for it. You can slowly goes up, and your efficiency goes up too. And I realize I start talking faster as well, so I need to make sure I tone it down a little bit, so everyone can follow me, right?
Well, we're definitely excited to have you on, Cody. Cody, I don't know. We were talking about this before the show. Cody, yeah.
Cody, yeah, yay, yeah.
Yeah, you got the hat on there for everyone watching.
Yeah. Say yeah
Cody,
to fire on the side, right?
Fire,
I think all your listeners knows what fire means. Financial independence, retire early, and then I say it, I'm living it, and helping more people achieving it.
You're totally living it, and you came to Canada on a student visa when you're 18 years old. Very little knowledge on wealth creation skills, and it's been about 11 years now. Yes, if I do the math correctly. So you're 29.
No, I just turned 30 last October.
Oh, okay, 30 now. Unfortunately, you're with with me at least in the 30s. Being a student and a full-time project manager to a financial coach, real estate investor, stock options investor. You've acquired a lot of skills, obviously, over that time, and you quit your job in beginning of 2020. So
without knowing COVID,
you're at great time to do that. So
maybe I'll get fired. Either way, I don't know.
So it's pretty interesting to go from that in a short time. Retiring before 30, and obviously you've built that through real estate, through stocks, and all that sort of stuff. So we're going to get into that through the show and probably compare them a little bit too here. Chat about which one you think is better for for the right type of people, and should be fun. So tell us a little more details about this. How the heck did you go from 18-year-old kind of newcomer to the country to building something pretty fast and substantial there in just over 10 years?
No, I would say I'm just like yourself. The last 10 years before 2020, it's almost like preparing all the building blocks all the way up to a year ago. And that's when everything takes off, right? But it's, everyone now just look at the event, but a lot of people don't see the process, right? And the process is when I first came to Canada, when I was 18, I thought I was probably top of my class in English. Okay, not everything else, I have an Asian face. I'm good at math, I'll have to admit. But in terms of English, I'm not the best one. So I remember first came here, first math 12 exam. I don't understand the question. I raised my hand and asked question, and the instructor and the teacher just give me a dictionary. And I was the one that was like flipping over. I said, can you just come here and tell me yes or no, just yes or no, right? This is what it means. Then I can answer the question. That's how bad it was. And then fast forward, I basically applied to all the best schools around Canada. I chose to come to Toronto at that time is because no one's in Toronto. So I'm a free kid. My auntie is in Vancouver. I want to come to Toronto, bigger city, more diverse industry. And then I decided to study engineer because, I don't want to write reports. I'm good at math, so on. And then I don't think that was really true. But I really enjoyed the journey of engineering. It really taught me how to grind, how to work very efficiently, how to work with a lot of highly competitive people, right? And then they trained my mindset to be very efficient, right? I took engineering as a major, business minor. In university, I learned all about accounting, corporate finance, stock option. By that time, I only start trading. No, I wouldn't even call it trading, just investing in stocks, starting in 2011. Right. And up to the point where like 2016, I started saying, hey, I should probably do a little bit of day trading and get into real estate. And that's when I hop on a lot of your podcasts. I started joining a lot of the real estate networking event around Toronto. At that time, I still work up north in Alliston. So I basically, whenever there's an event, I'll drive an hour down to Hamilton, drive an hour down to Mississauga, to Oshawa, and in the meantime, listening to podcasts, right? And whenever I'm not doing that, I'm basically doing day trading at night in the Asian market because of the 12-hour difference. And I would say it's a bittersweet experience. The bitter part is very stressful. At age of 26, all my white hair was coming out on the side. And, I spent an hour or two after my full-time job preparing, an hour or two trading, an hour with two, actually a lot of time more than that, writing my report. And I look at my own report and I show it to my coach at the same time, right? So the first 4 months I was losing money, like slowly grinding down my $10,000 account. But after 4 months, I started making money, end the year with 66%, right? Did that for 2 years until I fell asleep in front of my monitor. And in the meantime, I was actually trading on my phone, trying out different option strategy. And I starting to realize, I kind of put half the money here, half the money there. I started to realize doing on my phone a little bit more passive way is actually a similar return, if not better, but better return on time and stress. And I can actually get my life back, right? So that's when 2016 was when I bought my first property. At that time, I don't want to use my first time home buyer or save up, I think $30,000 to $50,000. My mom wanted to buy a bungalow in Toronto. I say, Mom, can I chip in 30 to 50,000? I just take 30 or 50% of the ownership. At that time it was $500,000, right? Now it's probably, I don't know, 800, 900 to be conservative. The last few months probably push over $1 million.
Oh, yeah.
Who knows? That was the first one. And the second one is I keep punching out the overtime when I was a full-time job, and I save up for down payment for my second one in 2017. And then 2 more in 2019. I buy a bungalow and convert it into legal duplex with the local team, right? And I refi, pull the money out and all that, right? And that's when 2019 I kind of stopped. And then, now that I accumulate a lot of capital in my trading account, and I want to, now that I don't have a T4 job, I'm thinking maybe the most tax efficient way is to start getting into multifamily, right? And now I have the bullets for that. And that's the next step, definitely. While doing all the stock option trading and training, coaching, teach a course. And I actually do wholesaling with one of the biggest flipper in Simcoe County, right? My partner, Simcoe House Buyer, we flip 2 to 3 house per month, and then we're ramping up our wholesaling side. We're doubling our marketing costs for 2021. Put it on automation. That's what you guys preach, right? Put on all automation, only focus on the key things, right? And that's what we're doing, and I'm very excited for that.
So you talked about a couple things. I want to get into when you said it was bittersweet. Let's talk about some of the challenges that arose there with the trading, the day trading, and
Yes.
let's also talk about after that some of the more substantial challenges that you had getting into real estate.
Yes, we can touch on that. So the bittersweet part is, as I was working full-time at Honda, I was trying to take on more responsibility because at that time, my goal was to climb the corporate ladder as fast as possible. I look at who's the youngest one that climbed to, let's say, director level at age 30. I'm like, okay, that's my goal. I want to get there. So I said, how do I do that? So I try to take on more responsibility, work more overtime. Like the average overtime I worked from 2015 to 2019 is 400 to 800 hours per year. So if you put that into perspective, I lose probably 100 days per year. So a lot of time I don't remember my summer. And on top of that, I was doing day trading at night. I don't know what I was trying to prove, but I guess I'm trying to prove to the world or myself is that, hey, I know most people lose money in day trading. I had the opportunity to have a good coach, which is 2 years younger than me. She's from Taiwan, very successful at the age of 20. At that time, she was 24, but she started in 18, right? So I was trying to prove that does this work? Does this not work? Is this part of my lifestyle, right? Kind of try and error period. And it's very bitter in a way where it's very stressful. And you feel like every day you're starting from the bottom, right? Because we don't carry any position overnight. So that means every day, even if you win 10 days in a row, today is a new day. And that feeling is very scary because you're only as good as your last trade, if you guys know what I mean. But in real estate is totally different, right? And real estate is we know the fundamental, long-term, this is going to go up. Short-term might be some correction, but you're not stressed about that because cash flow is, sustaining our operating costs, and long-term it will go up based on the fundamental analysis, right? So that was why it was bitter. And the sweet part is now that I'm not doing that, I can say I did that before. So anyone want to learn about that, I have experience with that, right? And jump into the second question is what changed after I quit my job? Yes, that was a learning process too. The moment I quit my job, the bank doesn't like me anymore. Whenever I say, hey, can I refi this? And they say, well, okay, you're a T4. Do you still work? I said, no, I don't. But my past 2 years are north of 6-figure. They're like, okay, maybe you should talk to a different bank, right? So I found out CIBC actually has a program for if you have a north of 3 property, then they can use DCR as long as I think it's over 1.1 and 1.2. Look at their overall portfolio. I think they can go up to like what's that called, LTV of 70%. So I was able to pull out some money, but not as much as I want after not having a T4. And now that any property I need to buy, unless I pay myself T4, which I have that choice up to March 1st, if I want to do that in 2020, I might take some penalty depending on whether I pay myself T4, dividend, or just other ways, right? But if I don't, then I have very limited choice with traditional, conventional lending.
Yeah, you know what? That's a very common answer to that question. Is a lot of times the answer to, what were the biggest challenges when you got into real estate investing? It is always more towards the lending side, right? Where do I get the money from? But to your point, you work on it until you find an answer. There's an answer out there, and it may not be 100% perfect. Like you said, for those listening, maybe didn't understand all of what Cody was saying right there. It's just like, so most banks will lend up to 80% of the assessed value of the property. So when he was going back to refinance with the bank, he's saying that the ones that he's looking at now are only lending him 70%.
70%, right? Yeah.
So, but still, like that's a way that they are able to look at you, when a lot of times the answer is just going to be no. Like, where's your T4? You don't have one. Sorry, yeah, go somewhere else. But the challenge is then not going, oh well, I guess I'm done. Maybe this real estate thing wasn't for me. To go and find the answer you're looking for, right?
Yeah, and just and I was actually hinge on that concept of getting the lowest interest rate. I know a lot of your audience focus on that, getting the lowest interest rate. Now, if you take a step back, and I hear from many experienced investors as well, is if you take a step back, if you look long term, what is that really 0.25 or 0.5% comparing in the long term? If you can land the money and the appreciation is there, you will get more out of it over the long term. But a lot of people just focus on short term. Is that, oh, if I can't land conventionally, oh no, I'm not going to go to our alternative lender. I'm not going to pay 1 to 2% more. But if you still set up your business right, if you buy it low enough, make sure your cash flow is okay. You do your sensitivity analysis. You have your reserve fund there. Then technically you can, strategically take on higher interest rate and still work, and should build your empire faster. Right. So I think you guys can probably relate to that.
Well, my suggestion is always to people that I'm sure there are good agents that work right for the banks, but we always like to use like a broker channel, or I like to suggest that anyways, because then the options are like they understand your goals. So they're going to listen to you and go, okay, this lender, is going to have a higher interest rate, but you're going to be able to buy more properties. So, they're going to be able to explain the trade-offs and what they mean, right? Correct. And work with you to build on your goals. So that's always something we suggest.
Very, very good suggestion. And nowadays it's hard to find a broker that have the time to sit down with you because they're so busy. So when I started out, I have to touch on many brokers. I learned a bit here, a little bit here, attending all the real estate seminar, and put everything together so I know which bank to go to first, then second, the third, CIBC, RBC last, right? All those things I have to learn it from multiple people, multiple broker, right? Because they, just to be very, very honest, everyone has their own agenda too, right? So you got to make sure you trust and you verify, right?
Makes sense. So a lot of the lessons in the way you've shared so far is just, you've obviously worked very hard to be 30 years old and have a lot of knowledge around this and to retire. I mean, it doesn't happen overnight. You spent 11 years basically to get to that point, but you worked your ass off and you grinded and you didn't take no for an answer in a lot of cases, because you just found a way to make it happen. Was that
pretty much?
Was that the story with all of your investments? Like, what strategies have you used with the real estate side, and was it always, the one strategy that you stuck with, or have you kind of tweaked it along the way?
So I look into multiple strategies. I rent to own, and I look into like wholesaling a BREI. Right, I'm basically doing BREI, not for the first two property. I just bought it. I thought, hey, if I ever one day gonna move in there as a family, that's where I'm gonna stay. But this third and the fourth one, I look at it as a BREI, right? And I try to pull out most of the money, so it's kind of like an infinity house, right? What we call it. But I haven't done like crazier things like, I haven't taken on a bigger scale like multifamily. I haven't taken on retail plaza, which I have a group of friends who are doing those even down in the States. But so far, in my opinion, I still think multifamily, if you can get the right number, I think that still make a lot of sense, because there's technology is changing so fast, right? Just for the past year. So in the future, we have to make sure that is still working. And then technology has really replaced a lot of brick and mortar. So I think a lot of people think there's opportunity there, but I still want to bet on things that will work in the long term. I'm not trying to pick a really cheap investment, but it might not work out. I'm just hoping it to rebound, right? So I still think personally, I think multifamily will work out well in the long term, because we just have more people come into, a certain area, and we need a place to stay, right? And the supply cannot keep up with that demand in certain area, in Toronto, certain area, and Canada, right?
And now, were you really active on these deals too throughout your career so far? Have you been the one like doing the projects yourself, like maybe hiring contractors as needed and all that sort of stuff, managing it maybe yourself too?
Yeah. So I was always the buying. I was always on my name is always on the mortgage. I put the deal together. I put a dedicated bank account to make sure the accounting side is easy. I have a QuickBook attached to it. I do the consolidation myself. I should do it more often than not. It's quite painful to chase 1 year. And contractor wise, yes, I'm great. I found, when I invest in BREI, right, my 2 legal duplexes in BREI, one is in Alliston, bungalow is in Toronto. So when I was in BREI, I found a good realtor, a good investor-oriented realtor. Then he basically hooked me out with all the local contractor, which it turns out to be really competitive price. It took a bit longer than I wanted to, but to me, if I save 20,000-30,000, the operating cost of not renting out or anything is $1,000 to $2,000 per month. I'll take it anytime, right? So there's give and take. It's not like always you need to be getting on the point. There's always things that comes up, and just how do you adapt to it, right?
Yeah. So ultimately, how did that lead to getting out of your career? Like, how did that actually play out? Was that was that always your goal, I guess? And then also, how did that happen so quickly? Before 30 is most people are past that point. They may be looking at before 40 or 50 or 60.
Yeah.
But how did you make that happen so fast? And is that something like, would you do it the same way if you were to repeat that, or what did you learn along the way?
What's funny though? That's a really good question. I never. Now, the more sometimes when I take a shower, right, I think about things I did for the past 10 years, if I can do anything differently. And in hindsight, if I know real estate earlier at age of 18, maybe I would just get my license. Maybe I'll never go to school. Again, everyone don't take it the wrong way, because I know a lot of people is like, I want my kids to go to school. But if you have to drive like I do, or like Sandy, or like Rob, is if you start a lot earlier, and then let's say if my parents say, hey, I allocate this money for your education. At that time, international students are very expensive. It's like 33. I started with 27,000 just tuition first year. I graduate. The last year was 33,000 just tuition. Okay, so imagine if I take that money, I say just close my eyes, buy any bungalow in Toronto. I just live in it, house hack it. Meanwhile, everyone's going to school learning about algebra, calculus, which I don't really use anymore, which I still know. But if I just go out and hustle, and I find a mentor like Sandy or Rob, and I say, hey, I have nothing to lose, but I just have time and energy. What can I do? Maybe I'll be way ahead of game right now, right? But it's hindsight. Not everyone can take that route. It'll be a lot more beating, because mentally I was probably not ready because of the 4 or 5 years of education that trained me with very competitive people, right? So maybe I wasn't there, but if I have a choice and if I have nothing to lose, maybe I'll choose that, right? I know it sounds kind of crazy, but in the hindsight, I will probably do that. And I think I'll probably go further. And maybe I wouldn't quit my job at 29, maybe I'll quit at 25 or never quit. And my portfolio will be a lot bigger because I'll learn a lot of what I know from marketing, from talking to investor, from raising money, from just high ticket selling, right? All that, if I learn it early on, I think that will make a huge difference, right? I never learned that in school. I never learned that in school. Even at the top, one of the top school at U of T, any marketing, any sales class, I feel like they don't do it themselves, right? Or at least they're holding something back. They're not really telling me, right? So,
yeah, I think it takes that aha moment, right? For me, I didn't have the money to invest in real estate, so it never crossed my mind until I was seeking out education and found a way to do it without money. Who knew that was even existed, right? But then you have that moment. I think that's what it takes, right? So I would have loved to learn it earlier as well. I think it's just a matter of I guess, seeking out the information, right?
Yes. And
you don't know what you don't know. That's what they say.
And then one thing I learned, not just for myself, but a lot of people out there, is I understand when you're starting out, you might not have the capital to invest in a good trainer or a good training course, a good mentor. Of course, you have to trust but verify everything because, when you don't have a lot of money, that money is very important. But if you can find one or even volunteer and say, can I help out with some of the things? And meanwhile, I'll shadow you. That's a good way to learn. And that will exponentially reduce the amount of mistakes you make. So I say that both in real estate and both in stocks or option investing. If I could have found someone, that would teach me early on what to do and how to raise money and all that, which, that's kind of what I'm doing now. I don't know where I'll be at. I think there's no limitation to age. Like now that I realize that I just turned 30, when I talk to people, no one cares about my age. So throw that out of the window. You're 60, you're 50, you're 40, you're 20. It's how much knowledge you really have and how much experience you really have, right? And I make sure everything I say, I did it myself. So I learned the mistakes, what not to do and what to do. Then I feel confident sharing and I hold that very close, right? So that's how I keep my reputation there, right? If it doesn't work out, at least I know if it doesn't work out, how can I turn it around, right? Because that happened to me before.
Yeah, absolutely. And you can learn from those mistakes. And you can also, like you said, you get out there, you meet people that have been doing it, you find that mentor, and they can also help you avoid those mistakes as well, right?
Big time.
Why don't we transition a bit into stocks and real estate? Let's compare them a little bit. I want to know what your strategy is with stocks generally. I know it's probably changed over time, but generally, yes. What ones have you used and what do you use today? And then let's compare them a little bit. What the pros and cons are of each.
Yeah. So I started in 2011 stock investing. At that time, I was looking at just boring stocks like Loblaws. I think at that time I was looking at some Enbridge, TD. And I just put the money in it. I like the dividend and I just forget about it. A year after 10, 20%. Okay, good. And I participated in Alibaba IPO. I bought it right when it came out. I remember it was 120 in 2014. I still remember. A couple months went down to 100, stayed at 100 for a couple months. Not that I look back, you're like, Alibaba is here. But when you're at that time, you're like, oh my God, did I make a mistake? At that time, no one knows what Alibaba is. Like the e-commerce thing wasn't big yet, right? And fast forward to like 2016 to 2018, that's when I was doing day trading. I was actually trading the stock future index of Taiwan and Hong Kong. So that's kind of equivalent S&P 500, just, the overall benchmark, right? And I was doing that at night. And, while in the daytime, I was using my phone, play some option strategy, right? Buy side, kind of like buying lottery a little bit, taking calculated risks a little bit, playing with selling side a little bit and see which one fits my rule as well, right? And after 2018, when I stopped day trading, that's when I think the strategy, I basically perfect the strategy, refine the strategy. I took many courses, online, offline, once in US, once in Canada, and I know all the pros and cons. And that's when last October, on my 30th birthday, that's when I ran my first course for my own stock and options. So for people who doesn't know, I don't just came out from nowhere. It's because of all those things I did. I blew up my account multiple times before from day trading, right? And all that. And it's because I started small money, so it doesn't hurt me. But I blew out there, and then I recover, go further, so I know what to do, what not to do in the long term, right? And now that what I do is I just do on my phone. I do mostly selling side, 80% selling options. That means I'm like the insurance company where I sell someone a policy, I collect a premium, and if someone on the other side never make a claim, I keep all the premium. But if they do make a claim, then I have to buy 100 shares of the stock I want in the long term that has a good fundamental, and I just have to buy 100 shares of that at a discount, right? So that's 80% of my strategy. Another 10, 20%, depending on timing, depending on the certainty in the market, I do buy some options as well, right? Whether it's short term or long term. And that's where I compensate my return. Like I make my bread and butter from the 80% of selling options, but 10 or 20% is where I say I can increase my return by twice. But if I lose, my return goes from 40% over year to 36. So I can take that 10% decrease from 40 to 36, but potentially I can make 80%, right? That's really the goal. So even if I lose everything on the buying side of option, I only decrease my overall return by 4%. That's what I'm trying to do. And I use those money to buy more real estate, right? Right now I'm accumulating a lot more, and now that I have corp and all that, I'm just going to go buy multifamily. And now that I have, VIP clients with high net worth, I talk with a lot of them. It's like, hey, if I I do wholesaling, so if I come across a good multifamily, do you guys want in? Like I probably, I'm not sure, maybe 1.5 million, like you guys, handful of them. So each of you guys come up with 200. They're like, yeah, cool. Sign me up. I know you're doing wholesaling. You can buy off market. I know you're good with number, you run your spreadsheet. So I make them a lot of money. So they have a lot of trust in me, right? So I just started that last October. I have a group of good people supporting me, and then I make them a lot more money, and they're very happy.
That was your birthday present to yourself.
I was going to do it a week before my 30th birthday, but I just say, someone told me, hey, that's Thanksgiving in the US. I'm like, you know what? Screw it. Let's just do it on my birthday. That'll be the coolest birthday present I ever give myself. I make a lot of money. I help a lot of people get to the next level, right? And I would just go celebrate. And after the Sunday, I did it over a weekend, right? At 6 p.m. on Sunday, I go celebrate. And I was drained. The first course, I was drained. Right? That was the first time I did it talk for 8 hours per day, 2 days in a row. It was just me, some guest speaker, but man, I was draining, right? Mentally, physically.
So tell us a little bit about this. Like, what is it, and what will the people learn?
So,
what's it called?
Yes, so I call it a stock option beginner course. Now I'm about to announce the intermediate course. You guys are actually the first one to hear it outside of my alumni group. I'll announce it in a couple of days, where the beginner course is more towards people that has minimum experience in options. So a lot of them might have experience in long-term investing in stocks and unregistered or registered account. Right now, they want to get to the next level. How do you get a more consistent income, right? And if they want to learn how to sell option, how to do it right, how to pick the expiration day, the strike price, how to pick the stocks, right? And there's a lot of stocks out there, a lot of hype too, right? So how do you do that and win in the long term? That's more geared towards, let's say, a lot of most of my alumni are real estate investor. They make quite some money in real estate now. They're like, Cody, I still live very poorly because I look at on the paper I'm a millionaire, but I don't have a lot of money to spend because the cash flow is not there. Always there. Then a lot of time it goes into my reserve fund. I want to make sure if something goes right. So they want more cash flow. So I say, why not you allocate some money into this cash flow generating a beginning course I'm teaching, where it will help your lifestyle, take out a lot of stress. And meanwhile, you can actually increase your saving faster, and you can take that money that you make and buy more real estate. So now you have more option of, besides creative financing, joint venture, raising money. Now you can actually speed up the process. If you don't want to do any of that, you want to buy faster, right? So instead of buying one per year, now you can probably buy two per year, because the money sitting on the side is actually generating a lot more return, right? And you can put it back into real estate investing, right? And then, I don't want to go too advanced, but you can put in the corp, you can start shuffling money, never go to your personal level. So it's all very efficiently in your corp, and, let the money grow faster and less tax you're paying, right?
So ultimately, the stocks can be great. Real estate can be great. What have you found has been your greatest return on investments? And we're going to talk about time too. So just focus on the actual just dollars for dollars return that you found.
Real estate, hands down. So all my legal duplex, when I run numbers, okay, I was on Andrew Hines' podcast. Shout out to Andrew Hines, great guy. I was on Andrew Hines' podcast. So he actually ran a cash flow sheet on the side, and it was running my number. So that's, for example, one of the property I bought in BREI was 405. Okay, January 2019, 405K. Okay, so after repair value at that time, we're aiming for around 560, right? And then, rents, and I have property management. I put in 3 to 5% maintenance costs and all that. After all of that, I put in 2% appreciation. Year over year ROI is 75%. So cash on cash return, right? Yeah. And then he ran it on dot, and I just said, it's 75, Andrew. And he didn't trust me. He just ran it. Oh, 75. I said, what about 3%? I said, 90. And he ran it as 90. So even 3% appreciation is at 90%. So a lot of people is like, Cody, why are you still doing stock and option thing? I say it's quite different because, I'm very conservative on that 3%, even though, the past 2 years in BREI or anywhere like in Oshawa, Hamilton, it just 10, 20, sometimes north of like past few months, probably just over 20%, right? That's nuts, right? But that's, we don't know how long the music will keep playing, right? And I want to make sure if I only get, a Ford property, if I only get $1,000, $2,000 passive income from those property, I can't really retire on that, right? If all of a sudden a furnace goes or a roof goes, that money is there, right? I never take out cash flow from my property. Really, it's just always in there. It's just sitting in my bank account, keep going up, right? But that don't generate. It's good ROI, good long-term. I just close my eyes. I don't think about it, and then in 5-10 years, I know it might double. And because it's inherently 3 to 5 times leverage, right? Because I borrow up to 20 or 30%, 70 to 80%. So I'm leveraging my money 3 to 5 times. So that's why that return will go up to 75 or 90%, even just, with 2 to 3% appreciation, right? But on the other side, the stock side, I don't use leverage. I don't use much, maybe up to let's say up 20%, mostly. But then, the return I've been getting it's there, it's up there. I can't promise, but I'll just say a minimum of 4% really per month, at least for the past three years, right? But 2020 has been odd, it's over 100%, but I don't count on that. But it's because I don't leverage at all. But if I don't leverage, I can still get that kind of return. And those are the cash I can whether spend on lifestyle, spend on savings, spend on my marketing to get my business to the next level. That's the money I can use. Right. And that takes a lot of stress off my shoulder in case the real estate didn't go up, furnace goes, or something like that. Right. So that's how I look at it. One way is kind of sustaining and then helping with that auxiliary income that comes in to stabilize my lifestyle, up my marketing, up my expense and all that. But the other side, the wealth generation side, it's real estate. Especially in Toronto. If you're down out in Alberta, out in BC, might be a bit different. But in Toronto, around Toronto, I'm still quite bullish on it just because everything I've seen and all the stats I read, and I'm an immigrant myself, right? So I know what's like to immigrate to US, what's like to immigrate to Canada, especially to Toronto, right? So I think I could confidently say that, right?
Now, a great answer. I think that makes sense. I agree with a lot of that too. And what about time though? Because real estate, sometimes I think people are worried about spending a lot of time there, and maybe they have a rough month or two where there is a lot of time spent, maybe repairs, maybe tenant issues, things like that. How does that factor in, and does that change your thought on where the best return is at all?
Yeah, I will say I'm one of the fortunate one. I think I'm one of the lucky one. I'll call myself lucky one. And I think I'm lucky because I put in so much work. To the way I'm building business, the way I do anything is I don't look at what's the maximized return, but I look at how can I foresee any problem? How could I solve those problems and make sure they don't even show up? For example, on the real estate side, if I deal with like screen my contractor, I say, can you show me a couple of your past projects? And I talk to, the clients and say, how does it actually work? Right. And I don't mind overpay a little bit on the contractor side. I make sure they're happy every time I go. I don't try to ambush them and then say, why are you not here? I always try to bring coffee. I always try to bring McDonald's, bring 10 minutes, whatever. Just make sure they're happy. And so, there's odd times when I really need help to put on a mailbox for my duplex in the basement. Can you do it for me? They're like, yeah, no problem. Don't worry about it. Don't come up here, Cody. Right. So I treat all my, I wouldn't call them employee, but all my partner relationship really well. If whenever they do something great, I reward them. Sometimes I bring a check to them, right? Just to make sure they're all rewarded. I pay my way through it. And that's why I think I'm always on the short list. That same thing for property management, same thing for my agent. I'm not going to negotiate any of those agent fees. You deserve it. You did everything. You pre-screened the house for me. And I bought one of the house without sight unseen, right? So, so I think that's how I become really lucky, because I'm not very stringent. I'm not in that way. I want to make sure everyone who did their job, exceptional job, I pay my way through it, right? And that's how I do in real estate. And so I didn't run into big problem. Yes, I have tenant that was definitely creating some drama, but I have property manager there to deal with that. And I told them property manager is, as long as they're happy, if they want to move out sooner, later, whichever. I don't mind losing 1 month out of rent, but that takes a lot of stress off you guys. And the rents kept going up, so we can reset from there, right? So there's only small chance of time that really costs a little bit of stress. And now that we flip to the stock side, right? Stock option side, I've been doing it quite a while. I know what works, what not works. And now I just do it on my phone. I was looking at, I make 90 trades in 30 minutes. So some of the people are like, Cody, you're nuts, right? So I have VIP clients. Actually, the moment I make trades, I make 6 screenshots today because there's too many trades, right? The moment, the night before I say, hey, tomorrow, this is probably going to happen. In the morning, I said, these are the things I'm looking at. Right after market open, I'm going to do these trades. So they're already getting ready. And then, sorry, I prevent them with like reasons afterwards, right? So they learn and then follow, right? So, sorry, I plan I just always plan ahead, right? So I spend like probably 30 minutes to an hour before the day to plan. Sorry. And I spend about 30 minutes trading. And that's it. From 9:30 to 10, I trade, and then
Sorry, we got a minute here. Don't worry about it. Take your time.
Yeah. So from
9:30. It's an hour a day, is what it sounds like.
Yes.
I know there's probably a bit more behind the scenes, but the active work is an hour a day, give or take.
Trading, yeah, an hour a day, and I do it anyway, and this is what I'm passionate about. So I don't feel like it works. So now that I already punch in the trade, the day is mine, right? Go on podcasts, build my other business, right? That's all mine.
You know what I thought was really interesting there is you consider yourself lucky, and I don't believe that in any way is the right use of that word, because everything that you said to back that up was all preparedness. There's no luck involved in that whatsoever. Nothing fell out of the sky and was handed to you. You went out and you prepared yourself for all of the opportunities that could come your way, and that is actually how you did it. It doesn't sound to me like luck had much to do with it, but I think that's a really important lesson as well for everyone to understand. I don't think that that's lucky at all, though. But I do believe it's interesting that you think that way. So I don't know how we get into analyzing all of that. I think it's a good trait, though.
There's reciprocity too. Reciprocity too, right?
Yeah.
You're throwing that out there. That's when people get lucky. Generally, like there is some one-off luck here or there, but consistent luck is because you're throwing preparedness for sure as well, and you're ready for when the luck comes to absorb it.
Correct.
And you're throwing out reciprocity in the world, which comes back in the form of luck sometimes.
Yes, and really just anticipating problem and try to solve them before it comes up, because that's when it's the easiest to solve it, right? I always know my worst case, best case scenario. Mostly I focus on worst case. If okay with all the worst case in real estate, all the worst case in stock and option, I can sleep like a baby at night, and the rest is just upside to me, right? That's how I look at it.
So we've talked about the stocks, we talked about the real estate. What else do you have on the burners?
So for the longest time, in 2019 beginning, or 2018, late 2018, my good friend, my agent up in Barrie, is like, Cody, if you ever think about getting a real estate license, get it now, because OREA might turn into Humber College. At that time, we don't know how that's going to look like. But I just signed up for my first course, and then I passed it with high grades, and then I forget it for a year. And now that I'm coming back to revisit to it, of course, there's some sunk costs, right? I'm already doing investing. I really enjoy this. I'm like, I will get it. And now it's at the point where, I was talking with Sandy about, now that I did all this, I have a clear idea of why I become a real estate agent. It's not just as simple as I want to find another job to hustle. It's how I can leverage with what I have with social media, with my followers, with my VIP clients, with more high net worth people that are seeing what I'm doing. I know there's a lot of potential to go even further in that direction, right? Whether that's joint venture, and then we negotiate a way. I say, hey, you know what? I'll help you guys find a good deal. I take the front end or the back end, or it's later down the road helping out some of my VIP clients and say, hey, buy or sell this. It's not for me to gonna go out there and, of course I want to practice on all the fundamentals, but it's not very efficient for me to go out there and knock on doors and cold calls, right? Which a lot of agents start. I really respect that. But I'm very lucky in a way. I built that up. I think I can start kind of a second floor, right? And I don't want to put that to waste, because I know whatever the brokerage I join, or whatever that my partner is going to team up with me, they can get all the knowledge and all the things I already built up, right? It's almost like a package for them, right? So I don't want to put that to waste. And I'm already in chat with Sandy, and Sandy knows about this. I might join the team. Yeah.
Well, how what about the YouTube stuff? Because you're all over YouTube, man. You didn't even mention that.
Hey, you know what's funny though? I only have 15 video. But again, I'm lucky. I got 11,000 subscriber with 15 video. And when I first start, guess what? I spoke Mandarin for the first 2 video, because I don't know who my audience is, right? I was like stuttering a lot like that. And then I was like frustrating. I was figuring out the camera, the scripting, what topic should I talk about? How do I do editing? Should I use Adobe Premiere? Should I use Final Cut Pro? Man, that was painful, right? But fast forward like 2 videos after, I look at the back end. It's just like yourself. You look at a lot of stats on your back end. I see most of my listeners are from North America. Even when I speak Mandarin, most of the listeners in Canada, US, maybe a little bit Singapore, Hong Kong. Where do I get paid most of the money? Where do most of the money where do most people have the money to invest? North America. Okay, great. I'll switch to English right away. So starting my 3rd video, it's all English from then on. And then I spent a lot of time market researching, right? So just like you guys, when you want to talk about things, you want to talk about evergreen things. 5 years, 10 years down the road, when people come back and refer to it, it still works. So for me, I took the longer way. 80% of my content's on evergreen. So it will still make sense 5 to 10 years down the road. But 20% of it is the trendy side, where I get some traffic in, but I want to make sure those traffic I get in are the audience I want to target. It's not just random people that want to gamble and go big or go home. I don't want those clients. I don't want those audience, right? So I make sure my video reflect those. And again, I'm really lucky in that way. I figured out the YouTube algorithm in the background. So one of my videos jumped on that YouTube algorithm. And now I think it's probably around 160,000, 170,000 views. And that one video brings me in, 80, 20% rule. It brings me in 80% of subscriber, 80% of the money. YouTube's paying me a couple grand per month. Just from that one video. No joke. So that video almost killed me. I spent 30 hours on it, and my girlfriend was helping me editing, because everything has to be perfect, script down to the word. Every picture that comes out, any lines, any squares that comes out, it's down to the T. There's no garbage word, right? 15-minute video, I cut it down to 12 to 13 minute, right? And then how everything is placed, and I don't lose anyone. Good transition, good flow. Like that video almost killed me. So that was the video.
I don't know how you find time to have a girlfriend. Now that you mentioned that, she must be like how did you find time to do all that? That's what I think. A lot of people might listen to your story and think, holy crap, 30 hours on that. I spend this. I'm working all day and all night. I'm working, especially when you had a job. How the heck do you find time to live a life?
Before I quit, I was a lot more stressful because I try to drive my girlfriend to work and try to pick her up after work. But now that I quit the job, I just work at home. This is where I live, right? This is my den. It's not a virtual background. This is real background, right? There's a Say Yeh hat here. This is a real background. And I moved to a place, like my girlfriend works at RBC. She's a superstar and financial advisor. So I don't feel bad when I say, she asked for money, asked people for money to invest in RBC's mutual fund, but she actually asked me to manage her fund. I'm not ashamed of saying that. I don't feel bad because she still killed it. Like their branch is #1 in GTA right now. And she's the #1 sales in that branch. So that says a lot to me. Very nice girl, very, very good and all that. So from that point, I say, hey, so after I quit my job, I said, I got to move to a place where save me some time, save me some stress. I used to live like 15-minute drive from where she works. So I drive her to work, drive her off work. Sometimes even when I'm around the area, I just buy lunch for her. But I say, you know what? Let's move to within a 100-meter radius. Okay, let's move there. So if I work from home, if I go out play golf, you can come home for lunch. I can prepare lunch for you. And we can always see each other. Even though I'm busy at home, right? That's how I keep that. And really, I don't need to stay anywhere, right? Of course, now that I get into more of real estate agent side, then I have to be local. But up to that point, all my business was built so that I can go anywhere in the world, right? That's what the fire really means to me. But now I want to take it to the next level. So I don't mind taking a break on that, going anywhere in the world. But I still can do that. But I want to take a break on that and build something within the next 5 years. So from there, I can really have more power and ammunition to live that kind of fire life. And I want to help out more people to achieve that along the way, right? So I just, I think you guys are the same. Retire doesn't mean sitting on the beach. I tried that. I did that for 2 days and I just get agitated because I don't know.
It's very hard. It's very hard to go. Like for me, if I go to do something like leisurely, it doesn't take long for me to get bored of it. I'm pretty quick to get bored of leisure time. But yeah, no, you know what? I'm sure everyone can feel the enthusiasm and see the enthusiasm that you're bringing to everything that you're doing. So I commend you for all of that. And we've learned a whole bunch of interesting perspective today. So thank you for coming on and sharing all of this. It's been fantastic to have you here. Yeah,
it's great to be on. Definitely very happy to share all that.
I love when we have our listeners, for years come on too, because it's just that makes it pretty cool for us to have people on who said, oh, I learned this, I used to listen, and now all this stuff you've done to come back and share with the audience is amazing. So yeah, we definitely appreciate you as a listener and as a guest, and now a past guest in a few minutes.
Yeah, it's almost like a dream come true for me because I never knew I'll get on podcasts like this, right? And it's because of all the work, all the luck, right? And brings me here. And that I feel very fortunate in a way where I don't feel I made it, but I feel I prove a point to myself. It's, don't dream so small. And I know sometimes, there's so many moments where I think, man, maybe it could have killed me. Before I quit my job, I say, what if, all of a sudden like COVID happened and then I can't make much money on the stock option side. I only have real estate, but okay, worst case, I'll sell one of my property or I refi one of my property, right? Then I'll take out money from there to live. And of course, hindsight is that actually during COVID, coming out of COVID, I make way more money in 2020 than any other year, right? But that was just, I didn't, I wouldn't say I anticipated that, but I have my worst case scenario planned out, right? So from there, it's all upside to me.
Yeah, there was definitely a lot of unseen opportunities that came out of that for me as well. Like just things that surprised me that, you know, when you look back on it, wouldn't have happened without it. So, I mean, I'm not saying, by no means am I saying it's good. It's just that, you know, you've got to look hard and find ways to create those opportunities, even in bad times, right? So, how can people learn more about your course, and how can people get in touch with you?
Oh, I'm actually running, I just started that. I ran a 2 free webinar, which there's, I think, close to 300 people sign up and 150 people show up on my first free webinar. I'm constantly trying to improve, get feedback even for just a free webinar. And there's an upcoming one this Thursday at 8 p.m. Eastern time, February 11th, which is tomorrow night, isn't it? Which is tomorrow night. Mm-hmm. And then, you know, from there on, every 2 weeks, I'll do one. So for anyone, or even a lot of my alumni has friends or family are interested, I say, now that you guys make money, you guys see how I make money, you guys trust me, you want your friends and family to learn similar thing, reach far even faster, no matter what their age is, you know, channel them to this free webinar. It doesn't cost you anything. Of course, I will show you my course and how much that costs and all that, but I think everyone is prepared for that. And people will come on, they're ready to get to the next level. If they don't take my courses, all good, right? At least you learn something. And I show a lot of common rookie mistake. At least you don't blow up your account like I did. Well, you know, on GME stuff. I didn't do GME stuff, but back in the days, I'll probably play it, right? Just, you know, avoid a lot of mistake, and you learn. If you take out 1 or 2 things from that, I think it's all worth it, right? So there's a free webinar. I have a website called CodyYeh.com. So Cody, CodyYeh.com. You can find, you know, in the future, this podcast will be on my website as well. And, you know, there's all the information about my beginner course. I'm working on the intermediate course that will come out. And, you know, I'm on Instagram, Cody__Yeh. I know someone took the Cody_Yeh, so I can only do __Yeh. And I'm on Facebook as well. I actually have a free stock and option Facebook group where there's north of 3,000 people in there. I don't police that group as long as it's not a scam or now a self-promotion. There's all kinds of crazy strategy, all kinds of beginner strategy, beginner question, but people can feel free to ask question there. Many people help each other. A lot of time I jump on and help out as well. So, you know, I can probably put that link in the description, or, you know, or if people can just message me on Facebook or Instagram and ask me if they don't see it. But if they go to my website, all the links are there, right? Even the free Facebook group and free webinar, the course, everything is on my website, CodyYeh.com.
Okay. CodyYeh.com. Great. Awesome. Okay. Yeah. Perfect. Thank you. I'm sure lots of people are going to be interested, and I'm sure hopefully you'll see an increase in some traffic there soon. Not that you need it. You're like, congratulations on your success that you've had too. So, you know, it's very impressive what you've done, I have to say.
Thanks. Yeah. Thanks. And I think probably both of you guys can relate is people like us sometimes really need to take a break and look at what we have achieved, not in the way that we feel content, but at least congratulate ourselves as well. Because a lot of time, like I know Sandy is probably the same thing, is how do we get to the next level? Now we're here, how do we get to the next one? We're always looking ahead. And that's how we have to plan, right? My plan is always 6 months, 1 year out. But a lot of time we need to live in the present, right? Whenever I'm with my girlfriend, my mom, I'll make sure I turn on my phone. I'm just here, because very precious time for me. And I want to congratulate you guys, congratulate myself as well on achieving those.
Yeah, like time for gratitude is very important for sure. Mm-hmm.
No, we don't always make time for it, to be honest. If we're fair, and you know, day to day, it's tough to force ourselves into that sometimes. But daily, it's super important. I agree.
Yeah, definitely.
Sandy, how can people get in touch with you?
2893-896846 or sandy@mckayrealtynetwork.com.
And people can reach me at rob@mrbreakthrough.ca. Again, Cody, thanks for being here, and everybody for listening, and we'll see you next time.
Thanks for having me.
Thanks.